The US market fell 2% on the back of the new narrative, higher for longer, with interest rates, with many believing that this has not yet been priced into the market. In today's video, let's look at how the rest of the world is reacting to this news and whether or not we could be in for a catastrophe, further downside collapses past significant cycle low points. If you haven't already, like and subscribe to the content. We have tons of macro analysis to get through in today's video, looking at the objective data before I give you my opinion at the end of the video, if I can hold out till then. From your comments, I'm seeing you're finding a ton of value from the video, so thanks for the likes and subscribes. And this week we have our free crypto and economic report coming out to you, so get along for that. Link is in the top of the video description. So let's first start with the shorter term before we blow this thing out into the longer term timeframes, looking at where this market has dropped to. Now, you'd note that we've been following our 50% ranges from the bottom here in December to the current top in February for the S&P, and this 2% drop has hit right on the 50% level, almost near on the 3,998 points. Yesterday closing at 4,007. So this is coming back to a very good balancing point in the market. Another point to note where we currently sit in this macro side of the SP 500, the stock market, the largest economy in the world, the US, we've just been hit with the rejection trap. So that's what we were looking at here around the 4,200 point level. That was pretty evident on the chart, and probably no surprises for many that we would at least test that level, maybe break out, maybe get rejected. But of course, it's a rejection level as it's been used as resistance many times over now. To the downside, we've labeled our support area here at around 3,800 points, currently sitting at 4,000. So dead in the middle here between 42 and 3,800. Nothing to be overly concerned about at this point. Past that level, we are still looking at 3,600 points as the second support zone before that final low at 3,500 points. Now, the only time I could see getting worried for the macro picture here, objectively speaking, looking at the data on the chart, of course, this is what the market has given us, not my opinion, is if we're to break down from 3,500 points, that would mean investors are not seeing the value in the S&P past that 3,500 points. But for now, we are sitting relatively safe here at 4,000 points with several support levels further down at 3,800, 3,600, and the low there at 3,500 points. Earlier in February, we looked at what the market could potentially give us for the month of February and March, and we're expecting some sort of pullback. That's what we were looking at from the 5th of February, just around these top levels, as this is part of the cycle. So objectively speaking, this is what the market has shown us over many years of history, that we could potentially see a peak into a bit of a trough. Now, the big area is going to be, where does this trough come? If we're getting higher lows above 35, 36, 3,800 points, that is going to be a good sign that it's setting us up for higher prices in 2023 rather than the major collapse that many are looking for. That's just taking the information off the chart. Let's see how the rest of February and March goes, but for now, this in the short term is working towards the plan, and in the longer term is also working towards the plan. So this essentially means in the short term, we can be bearish because cycles do have peaks and troughs. In the macro sense, monthly to yearly, we can still be macro bullish, believing that the 3,500 point level will hold on the chart here, and eventually we'll see higher prices past 4,200 points on the S&P, which would potentially lead the rest of risk assets to also increase in value as well. In the short term, the US's S&P 500 may look like it's struggling, but around the globe, there have been many stock markets putting in new all-time highs, and not just small, insignificant countries, major players in the global economy. If they're not putting in new all-time highs, they're putting in new 52-week highs. And typically when this happens, this means the market is heading up. Recently, we saw France, the world's 7th largest economy, according to the IMF, put in a new all-time high price on their stock market. They've even had a new highest weekly close candle throughout its entire history happened just last week. We've been covering this on the channel, also looking at the UK and on Twitter. So if you're not following me on Twitter, there is a link in the video description. I could squeeze in a quick shill about that. And with the UK hitting new all-time daily closes very consistently now over the last couple of weeks, and also new weekly higher closes. This is not the signs of a bear market or a collapse, especially as it starts to break into new all-time high prices. As I said, this is just the objective data, the information that has come from the chart. My opinion is reserved until the end of the video. I'm just relaying what the chart is giving to us right now. So France, as the world's 7th largest economy, has put in a new all-time high price on their stock market. The UK, the world's 6th largest economy, has put in a new all-time high price on their stock market. Germany, the world's 4th largest economy, is putting in 52-week highs in their stock market. If we put all of these together, we have another index called the Stoxx 600. What is the Stoxx 600? This covers approximately 90% of all the free floating market capitalization of the European stocks. So there are about 17 countries that make up the Stoxx 600, with 2/3 of the entire index being from 4 countries: the UK, like we just looked at, France, Germany, and rounding out that top 4 is Switzerland. And this market is also putting in 52-week highs, also breaking past some significant swing tops. It's also found support at a macro 50% level back in September and October of 2022, which was the so far cycle bottom for the SP 500 as well. So many markets around the world were making lows at very similar times. However, you're seeing the European markets making better gains than the US at this point in time. So we'll come back to the stocks on the channel. Make sure you are subscribed, like the content as well, so we can stay up to date with the world macro views. This is of course going to also help our crypto and Bitcoin trading and investing. As once we start to see the cycle really take off, that's when we get a lot more energy getting thrown back into the altcoins, because people are interested in gambling on altcoins when the markets are quite hot. Moving closer to the market action for the Stoxx 600 on our next 50% level, you can see the market had a little time here trying to test the 50% levels, more importantly back here in December, but has since broken out, come back to test some of these highs, and has now continued up. Now, all of this is just looking at the macro picture here as we continue to take out some big picture 50% levels. But that doesn't mean in the short term, like we're looking at for our March analysis, end of February, maybe early March, that we could potentially have a short pullback here. And from that pullback, we would then gauge where the low comes in order to identify what happens next in the cycle. But that's getting beyond the objective data that we currently have in the market. Let's continue with what else we're seeing worldwide. Now, France has been hitting new all-time highs along with the UK and many of the European countries doing relatively well. This might not come as a surprise, as we now see the world's richest man or richest family being that of Bernard Arnault and families. Now, what the hell do they do, and what is going off that is increasing the value of their wealth? Well, the company that he owns is LVMH, or Moët Hennessy Louis Vuitton. It is a multinational holdings of basically almost everything luxury goods. Typically, in a recession, you wouldn't generally see luxury goods brands going absolutely ballistic. This is characteristics of a second stage real estate cycle boom. There is going to be a mega bust, but right now we are seeing a lot of the fundamental factors coming together for this next stage of the boom. Now, that's Europe putting in new all-time highs. What's happening in Asia? Well, let's take a look at some of the largest economies in Asia: China and Japan. China putting in fresh highs last month in January, breaking past the major 50% level here after collapsing 45.94%, which was exactly the same as what it did in 2015. This was the big bull run of 2014, 2015 for China. It collapsed into mid-2015 and then again went on another big run. So we have dropped the exact same percentage here, 45.94%, call it 46, and are now seeing China start to come back to life Obviously, they've started to print some more money. That's been the most recent news. And that has, of course, been factored in or getting factored into the market again since the low in the last week of October. Now we're starting to test the major 50% level. So a lot of markets are beginning to come to life in Asia. We can take a look at Japan as well, which has held up relatively well. You can see all of these basing lows here as the rest of the world has been tanking. Japan has been holding up relatively well above previous resistance levels. And this is one of their biggest and strongest moves from their 2009 low. If you're just a recent subscriber, this is the 18 to 20 year cycle that we follow here that allows us to forecast where we are in the economic cycle. We've just started to come out of the mid-cycle slowdown. We had that nice boom in 2021 through assets like real estate, crypto, and stocks. And now we've just cooled off from such a mega boom, which of course was pumped full of money. This next stage is potentially going to lead us somewhere around 2026, then followed by a decline. Not a decline into 2026, but more increase in value based on 200 years of data in the US and 300 years of data in the UK. So stay tuned to the channel as we continue to follow the 20-year cycle based on the objective data that we've got from the charts that are showing new highs are forming in these markets and new highs are coming in the real estate markets as well. If you want to get into more detail with this and become a full-time investor, check out the links in the video description for our premium membership where we go through how to trade cryptos and stocks. We have plenty of courses on that, and then also putting together your entire investment portfolio, looking at the cycles and how we manage our own portfolios. Link to this is in the video description. I trust you found some value from the content, so if you did, hit that like button, subscribe to the channel. Plenty more coming up for you guys as this market warms up with a lot of new all-time highs coming in out there. Don't get fooled by the mass media. Check us out on Twitter and, of course, YouTube. I'll see you at the next video. Until then, peace out.